Let's learn how to use moving average in the most basic way. First, you need to know that moving average is commonly used to determine the trends. See here, if the price is above the line of moving average, there is uptrend. Look, the price of SP 500 is above moving average 100 and as strongly goes upwards. Let's see what the profit could be. With one contract, we could make over $400 for a few days. With 10 contracts, it means $4,000 profit. Fantastic, isn't it? When the price crossed the moving average from above, it is likely the price to drop. See below, the price crossed the moving average and boom, dropped, easy. So when the price crosses the moving average, the trend changes. Let's see the potential profit in the downtrend. $4,500 with 10 contracts for 2 weeks, easy. Right, here the price crosses, and again, up, another $2,000 profit. What do you think will happen here? Correct, huge drop. So break, drop. You just wait for the price to break and you act. You can put stop loss above the line of moving average. Let's see the profit potential. $3,800 with 10 contracts for 5 days. Sweet! Again! What do you think will happen here? The price crosses the moving average and boom, goes up, and now we have an amazing uptrend. What would our profit be? Over $7,000 with 10 contracts for 2 weeks. Not bad. This is the most simple explanation and basic use of moving average. Following such simple strategy, we could have made over $20,000 for a few months. Like and follow our channel so you can be updated with more strategies and lessons. If you need any indicator explained in simple words, write in the comments. We are happy to help.